How to pay off mortgage early, the top 10 tips. Few of us are fortunate enough to purchase our homes outright, which is why 62% of Americans have mortgages. However, that shouldn't mean we have to be slaves for the rest of our lives to a real estate mortgage. Luckily, you don't have to be. With the right tips, you can finish your mortgage sooner than anticipated and free your finances up. Let's talk about how to pay off a mortgage early. Why you should pay off your mortgage early. Before we offer the most popular strategies for paying off your mortgage on your real estate, it's important to understand why you should want to pay it off early. While different people have different motivations, here are some of the key benefits. Reduce monthly expenses. Think about what you could do if you no longer had to pay off a mortgage. Eliminating that expense offers a lot of financial freedom. Let's say you're 40 years old and you no longer have a mortgage payment, which is likely your largest monthly expense. That means that you now can put away $800 to $1,200 or something close to that range. Well, if you put $1,000 away every month for retirement at your age and have $10,000 already saved, then you will have around $1 million for retirement by age 67. Now, if you're already putting $500 into your retirement and you're able to increase it by that much, then you will have even more saved when you retire, not to mention the ability to sell your house. You will also have the ability to make more repairs to your house, save up for emergency expenses, eliminate other debts, and use more of your income as you please. Remove the cloud over your head. Credit card debt comes and goes, but your mortgage is there to stay. 30 years of interest payments feel like a burden after a while, so if you're sick of having that cloud hanging over your head, then paying it off as early as possible is your best option. Once it's done, you won't have those large monthly payments to worry about again. Owning your home. Currently, your mortgage lender owns your home and allows you to live in it. Once that mortgage is gone, your house is entirely yours to use as you please. Consequently, this comes with peace of mind knowing that if you ever find financial hardship, you won't have to worry about losing your house. You also won't have to worry about paying off the remainder of your mortgage if you sell your home, as you will receive the full benefit minus closing costs. How to pay off mortgage early. How to pay off mortgage early. How to pay off mortgage early. Now that you understand some of the key benefits of paying off a mortgage early, you're probably interested in owning your home as soon as possible. Well, we have you covered. Here are some tips and strategies to help you pay off your monthly mortgage payment as early as possible. 1. Buy the right house. If you haven't already purchased your house, then paying off the mortgage as soon as possible is a lot easier when you choose the right home. Buying a house that you can afford and shop with the idea of paying off your mortgage early as a financial goal. If you haven't already purchased your house, then paying off the mortgage as soon as possible is a lot easier when you choose the right home. Buying a house that you can afford and shop with the idea of paying off your mortgage early as a financial goal. If you haven't already purchased your house, then paying off the mortgage as soon as possible is a lot easier when you choose the right home. Buying a house that you can afford and shop with the idea of paying off your mortgage early as a financial goal. Try to save up for a significant down payment, as this will help eliminate the need for a large mortgage in the first place, which means less interest. Use a mortgage calculator to determine your monthly payments and try to find one that's well within your reach. 2. Make paying down a priority. If you want to pay off your mortgage early, then prioritize it. Sit down and develop a strategy for paying off your mortgage using tips from this list, dropping extra cash into your mortgage, paying extra cash each month, or whatever you want. No matter how you choose to do it, remember your why. Whatever motivates you to pay off your mortgage debt, write it down and let it serve as a reminder to stay consistent. 3. Make an extra payment. One of the simplest ways to pay down your mortgage balance is to make an extra monthly mortgage payment instead of the normal monthly payment. If your paychecks come once every week or two, then this should be fairly easy for you to save some mortgage rate interest, assuming you have enough of a surplus in your income for the bi-weekly payments. Every time you make an extra payment, you're eliminating a month from your loan, effectively cutting the remainder of your mortgage down faster, all just by adding that extra payment. Also, there's an added bonus for paying an extra mortgage payment bi-weekly. Instead of simply paying twice a month, there will be 26 payments in the year instead of 24. This small difference of bi-weekly payment will make a huge difference on the mortgage interest payment you make to the bank's mortgage contract over the life of the loan. Can't afford double or? Many homeowners try to make at least one additional payment each year, as this will save you 2.5 years over the course of a 30-year mortgage. If you make 2 extra payments, it will save you 5 years. Of course, there are some risks to this. You don't want to dip into your savings and you always want to have an emergency fund on hand. Don't use this method if it's going to leave you cash poor, but do increase your payments by as much as possible within your means. 4. Refinance to a shorter mortgage term. If you owe 20 more years of payments on your mortgage, you can potentially refinance the term to 10 or 15 years with similar interest rate or even lower interest rate. This is a great option to force yourself to make a larger monthly payment. However, this does take away your flexibility in the event that you lose your income stream, so ensure that you always have enough extra money in your savings to make the increased payments if you choose this route. You have to account for threats like inflation, layoffs, and others. Refinancing could also help you avoid a prepayment penalty. Ask your bank if there is a penalty for paying off your mortgage too early. Not every lender has these fees, but it's worth checking. 5. Pay off other debt first. Your home loan mortgage interest rate are likely some of the lowest of all of your debt. If you have credit card debt, a high-interest auto loan, payday loans, or anything else, you should pay that down first. Let's say you owe $5,000 on your credit cards with a 20% APR. If you're only making minimum payments on that to prioritize your mortgage, you'll wind up owing an extra $1,000 by the end of the year, assuming you don't take on more debt. Once all of your high-interest debt is gone, you can focus on the mortgage. 6. Increase your income. If you really want to start paying down your mortgage but you're unsure about how to get the funds, increasing your income could help. Ask for a raise at work or take on a side hustle and dedicate that money toward paying off your mortgage. There are plenty of side hustles to choose from, but you can take on a part-time job, drive for Uber, or do anything that generates cash. If you earn an extra $200 a week, you could potentially double your mortgage payment with that. 7. Reduce other monthly expenses. Essentially, you want to be as frugal as possible. Increasing your income is fantastic, but coupled with a decrease in expenses, your buying power will dramatically increase. There are plenty of ways to reduce your monthly expenses and they are unique to each household. Canceling unused subscriptions, using coupons at the grocery store, and paying off high-interest debts could go a long way. The small switch of packing a lunch instead of eating out could save you a lot. $15 a day on eating out is $450 a month. If you pack a lunch that costs $3 a day, you could save $360 a month. If you're able to increase your income by $200 a week and reduce expenses by an extra $100 a week, that's $1,200 a month that could go toward your mortgage. 8. Practice good credit habits. If you want the ability to refinance your loan and save on your interest rate, then you will need good credit. Remember, even a difference of 1% on your interest rate could save you $2,000 on a $200,000 balance. Keep your credit card utilization as low as possible, don't take on debt you can't handle, and always make timely payments. Over time, your credit score will continue to build. This will help you get a lower mortgage interest rate. However, refinancing isn't the only way a good credit score can help you. Let's talk about some other options if you have a decent credit score and you want to pay off your mortgage faster. Try the Helic Method. Helic stands for Home Equity Line of Credit, which is a type of credit line you can use to eliminate your mortgage. This is a similar option to refinancing, but instead, you're taking out an entirely new loan. Assuming you've kept your credit in good shape, then a Helic could save you a substantial amount of money. Let's get into the details and use some simple math. You have a $200,000 mortgage for 30 years at 4.25% mentioned previously, with the $984 per month payment. Let's say your household income is $4,000 per month. And let's say that beyond the $984 mortgage payment you have $1,500 per month in other expenses. Now let's compare. A mortgage would involve 360 payments totaling $354,197 over the course of 30 years. However, a Helic would have $236,167 in total payments over 7.9 years, saving $118,073 in interest. It's just the math of paying off your mortgage faster. In that case, it's obviously worth it to take out a HELOC, but it isn't right in every circumstance. While it comes with some pros and cons, it is a popular option for those who want to eliminate their mortgage faster. Let's talk about how. Pros of using HELOC. Beyond the obvious advantage of paying off your home faster and with fewer interest payments, there are a number of additional benefits that make HELOCs a powerful tool. They offer incredible flexibility for handling all kinds of scenarios. What would happen if you lost your income completely? Well, with a traditional mortgage, you're still on the hook. Your monthly payment is the same as it was last month. The bank doesn't care if you lose your job, but if you stop making payments they'll foreclose and take your house. Losing your income isn't a good place to be, but with a HELOC you'll have much more flexibility for managing that tough period. Also, there are no restrictions on how you use the money in a HELOC like there are in some types of loans. Home equity loans are more similar to a credit card than other types of home loans, as they are a line of credit rather than a one-time loan, allowing for revolving debts and payments, giving you access to extra money when you need it. Freedom, in this case, allows you to pay to install new windows, fix a garage door, or make a new purchase for your home instead. How you use the access to this extra money is entirely up to you. Cons of using HELOC. Okay, so HELOCs have a lot to offer. However, home equity loans are limited, usually only allowing up to 85% of your current home equity. You're borrowing against your existing equity rather than adding to your existing mortgage loans. Lastly, closing costs are often expensive. However, some lenders waive these fees and costs or roll them into your loan. You'll have to talk to your lender for more accurate information. Overall, the pros outweigh the cons for many homeowners, and it just depends on your own financial situation and needs. It doesn't hurt to get a quote from a lender and see what they offer first. Start paying your home loan down today. Now that you know how to pay off mortgage early, there's no time like the present to get started. Some of these strategies take time, but in the context of 5 to 7 years compared to 30 years, you could save a lot with the HELOC strategy. You can find out how much the HELOC strategy could save you using this HELOC mortgage payoff calculator. The sooner you get started, the sooner you will pay off your mortgage, and have access to extra money and cash flow you wouldn't have access to otherwise.